Hi everyone, I'm excited to bring you another episode in my Q&A from Wall Street series. In this one, I'm going to be doing Nike stock and trying to figure out what's going on with the company in a question and answer session with Wall Street analysts. So let's get right into it. The first question comes from James Duffy asking, in North America, where do you stand with clearance efforts? And the biggest thing with Nike has been the biggest story has been the soaring inventory levels, and Nike has been on a clearance effort, if you will, a liquidation effort, trying to get rid of a lot of the excess inventory. So it's understandable. The first question that comes out from these Wall Street analysts is about Nike's inventory. And the CEO jumps on to say our ASPs, which is the average selling price overall for the geography, were up. So that's impressive. That was definitely benefited by strong performance in our footwear business. So the footwear business is holding up strong. Average selling prices are high. However, our focus in the quarter was really around our apparel liquidation as well as managing apparel closeouts. So, apparel is where management says feels they have too much inventory. That's where they've been focusing on liquidation. And both those dimensions were down mid teens from a unit perspective from the prior quarter. So, a double digit decrease in inventory units from the prior quarter. That's good news. Good progress from Nike in bringing down its inventory level, and also good news that the inventory excess is concentrated in apparel and not its footwear business. Footwear, of course, tends to have higher average selling prices, and if there needed to be discounting in footwear, that would need to be those would bring down gross profits more than in clothing. All right. The next question from Robert Durbel asking, could you give us an idea where you think you'll land in terms of the inventory levels or when you might sort of have a more normalized number? And the CFO jumping in to say, as we look at transit times continuing to improve, one of the things that gives us greater confidence is a more predictable flow of supply on normal lead times. And so we expect the spread of inventory growth to revenue growth to continue to narrow over the second half based on strong demand and also the buy tightening that we did for the second half of last quarter. So a couple of things are going to drive lower inventory levels. For one, the discounting and the liquidation measures that they're undertaking. But the second part is the fact that the supply chain is easing. Recall during the earlier stages of the pandemic, there were mass supply chain shortages, and so Nike ordered a lot of its inventory ahead of time just to make sure that it had enough inventory on hand because consumer demand is robust. Even in this most recent quarter, Nike reported revenue growth of 20% and 30% on a currency neutral, close to 30% in a currency neutral basis. So consumer demand for its products remains robust. That's why they wanted to make sure they had enough inventory on hand. They overcompensated and brought on too much inventory. Now they're working down that. And now that supply chains have eased and shipping times have came back down, they no longer need to order ahead of time, right? So they can better match supply and demand, which is going to bring down inventory levels because they don't need to just have all of this inventory on hand. The next question comes from Matthew Boss, congratulating the company for two straight quarters of double digit accelerating constant currency revenue growth and saying, what's your confidence in sustaining this kind of momentum? And the CEO saying, yeah, we grew digital 34% in an e-commerce when the global e-commerce grew at low single digits. So while overall global e-commerce grew by single digits, Nike grew its e-commerce by 34%. So really excellent growth from Nike here. And the CFO jumping in to say that, recall that we've been starving the wholesale channel for 6 to 8 quarters because of supply constraints. So we're seeing strong demand as we go back into our wholesale partners with available supply. So that's one area that's been a tailwind for Nike in the last couple of quarters, is that during the earlier stages of the pandemic, when supply was more constrained, Nike was keeping more of its inventory for itself and selling less of it to its wholesale partners, leaving less inventory with its partners like Foot Locker and Macy's and others, right? So you had to go to Nike directly to buy. Nike preferred that because then it makes higher profit margins when it cuts out the middleman. But now that it has excess inventory, it can go to its third party partners and say, hey, do you want some of this stuff? We're now able to sell you some of that. And so their wholesale partners are saying, yes, actually, we would like some of that, because Foot Locker in particular was highlighting how its sales were falling considerably because customers were going into its stores and finding that they didn't have those high in demand Nike products that they usually are able to find there. So Foot Locker and others are enthusiastic about finally getting those Nike products in their stores, because that's what drives customers to come to their stores. All right, and I will end with this final question from Goldman Sachs' Brooke Roach, asking, what do you think of the next phase of the membership journey for Nike would look like? And impressively, Nike has 160 million active members. That's a lot. And now their goal is to engage these guests more frequently, whether it's through Nike Training Club, Nike Running Club, or the Sneakers app. And by engaging them more frequently, they're going to know what products they want, making sure they have the best possible experiences, and making sure that repeat buying is made easy and convenient. So it looks at this as a whole, through the whole funnel, right? The first part of the funnel is getting those folks to visit the site and sign up and become active members, and then it's to engage these members, uh, getting them to open the app, look at products on the app, maybe add items in the cart, click on items. All of these activities Nike can record and then make judgments, make decisions based on all of this activity that these 160 million active members are engaging with the app with, right? So that gives Nike more information, more actionable intelligence that they could go and then make plans for what they're going to produce to supply this kind of consumer behavior. All right, so that's all I've got for this video. I hope you enjoyed this installment of my Q&A with Wall Street series. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.